What's up, guys? Welcome back to another video here at Wall Street PR. In today's video, I'm going to be going over another very interesting company, and this is a holding company known as GPO Plus. Ticker symbol, as seen in the top left, right where my cursor is GPOX. As you guys can see, not the most interesting looking chart because there isn't a ton of volume, but nonetheless, they are trading at a discount down here at 60 cents per share. And as of late, as you can see by these volume bars, volume is slightly picking up, which could lead to a further move to the upside or obviously the downside. But before I break down the stock chart and give my analysis and price targets for the future, as always, I'm going to give an overview and background about the company and talk about some of the recent catalysts. So you can see over here on GPOplus.com, their official website, you can see on their About Us page, you can see they're headquartered in Las Vegas, Nevada. They're a publicly traded global holding company of industry-specific group purchasing organizations, which are called GPOs, hence their name. Their main holdings are HealthGPO, which is a GPO for the healthcare industry, and cbdGPO, which is a group purchasing organization for the CBD and hemp industry, which I do think will be a huge industry in the future, in the next few months, the next few years. I think that will be one of the highest growing industries that they'll see the most rapid and accelerating growth in the next few years to come. But with that said, I do want to go over this article that was published today by Get News. As you can see, February 16th, 2022, that's the time I'm making this video. Title: Could GPO Plus GPOX be a rising star in the giant healthcare sector for 2022? I'm going to briefly go over this and then close things out back on Webull with that stock chart. But as this article states, healthcare stocks have underperformed the S&P 500 in 2021, but analysts are optimistic that a handful of top healthcare names are positioned for a big year in 2022. Stocks exposed to the ongoing pandemic will experience more tailwinds in the next couple of quarters, but the healthcare industry is expected to continue to normalize. Elective care has returned, high costs associated with COVID-19 patient care have subsided, and pharmaceutical and medical equipment stocks have begun to rebound, and so are healthcare stocks. One small cap, healthcare stock that needs attention is GPO Plus, like I just mentioned at the start of this video, located in Las Vegas, Nevada. And per their website, GPO is an entity that is created to leverage the purchasing power of a group of businesses or individuals to obtain discounts from vendors based on the collective buying power of those GPO members. Essentially, GPOs negotiate discounted rates from vendors and service providers, which are then passed on to their members. You can see the first GPOs were established in the early 1900s, and were initially set up as buying groups for hospitals and the healthcare industry. You can also see in paragraph 3 over here, the company had recently announced that Wayne Smeal has joined GPOX as its Chief Operating Officer, or COO, and a member of the board of directors. And Mr. Smeal began his career working for Fortune 500 companies, including McKesson, Armor Foods, ConAgra, and Kellogg's. Leaving the corporate world, Mr. Smeal ventured into private companies with more than 30 years in owning, operating, and managing businesses in multiple industries, including health, beauty, nutrition, hemp, and real estate, as well as franchising. And he has a successful history of developing management teams and growing successful companies. So obviously, this is this whole article is kind of giving you the overview and background, talking about what the company does, some of the recent news, and some of the recent hires in terms of the management team. So I do think they are a pretty promising company as a whole. And if we close things off back here on this 1 day time frame, or the daily chart, like I mentioned, 60 cents is kind of a pullback. If I go ahead and draw this in right here, you can see, excuse me 1 second here, if I grab this trend channel, we go to the top of this and then we go to the current price, you can see this is a downward channel, and they have been in this as of late. If I zoom in really tight, you can see they kind of curled back up and are beginning to reverse. You can see this MACD, if I zoom in even a little bit more, is looking very, very primed. When this orange line, this orange yellow line, curls back upwards and crosses this blue line to the upside, that means it's a shift in momentum from the sellers back over to the buyers, and we could see a reversal. So personally, guys, if 51 cents per share does hold like it did in the past, like it did just hit, I do think we bounce off of that level and continue this uptrend that we're currently seeing. I do think we could see a move similar to this all the way back up to the previous price levels of about $1.75 to the high of maybe $1.85, $1.90 per share. But nonetheless, guys, be careful because this chart really hasn't developed yet. You can see not a lot to base your predictions on because it hasn't really done a lot in the past. Not a ton of volume in the past as well, and volume is obviously picking up, as you can see indicated right here around my cursor as of late. But nonetheless, be careful when you're buying in. Honestly, guys, I wouldn't really be trying to time this one. If you are going to be a buyer and a long-term holder, I would kind of just set up reoccurring buys where you buy maybe every month, every week, whatever the case may be, regardless of the price. Instead of trying to time the market, you want to have time in the market, if that makes sense there. And as always, guys, do your own research before investing and only invest what you can afford to lose. With that said, if you're new here, please do subscribe to my channel. And like I mentioned, I will see you all in the next one.